Hello everyone. This video is prepared by the Chartered Accountants and Company Secretaries of the RAC, a chartered accountant firm based in Mumbai, India. In this video, we are going to understand the computation and calculation of aggregate turnover under goods and services tax. To understand the calculation of aggregate turnover, we need to have understanding of taxable supply, exempt supply, non-taxable supply, export of goods and export of services. Let us start with our topic of discussion. Aggregate turnover is defined under Section 2, subsection 6 of Central Goods and Services Tax Act, 2017. The definition reads as follows. Aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supplies, on which tax is payable by a person on reverse charge basis, exempt supplies, exports of goods or services or both, and interstate supplies, of persons having the same permanent account number, to be computed on all India basis, but excludes central tax, state tax, union territory tax, integrated tax and cess. Thus, aggregate turnover is the sum total of 1. Taxable supply as defined under Section 2 subsection 108 of CGST Act, 2. Exempt supply as defined under Section 2 subsection 47 of CGST Act, 3. Export of goods as defined under Section 2 subsection 5 of IGST Act, and 4. Export of services as defined under Section 2 subsection 6 of IGST Act. It is very important to understand that aggregate turnover is computed pan-wise, on all India basis. Thus, taxable supply, including interstate supply, exempt supply, export of goods, and export of services, are to be computed pan-wise, on all India basis. Let us understand this with an example. XYZ Limited is having GST registration in Maharashtra, as well as in Gujarat. Turnover of Maharashtra and Gujarat needs to be aggregated to compute aggregate turnover, since the PAN of both the GST registrations is the same. Starting with taxable supply, it is defined under Section 2 subsection 108 of Central Goods and Services Tax Act 2017. The definition reads as follows. Taxable supply means a supply of goods or services or both which is liable to tax under this Act. Essential ingredients of taxable supply are 1. There must be supply, as per Section 7 of CGST Act. 2. There must be supply of goods or services or both. Goods is defined under Section 2 subsection 55 of CGST Act, and services is defined under Section 2 subsection 102 of CGST Act. 3. The supply of goods or services or both must be liable to tax under Section 9 of CGST Act. Thus, taxable supply consists of supply, goods or services or both, and liability to tax. Examples of taxable supply are auditing services by a chartered accountant, or GST return preparation by GST return preparer, or sale of pen by a pen manufacturer, or sale of mobile phone by a mobile phone shop. Now that we have understood taxable supply, let us now understand what is exempt supply under GST. Exempt supply is defined under Section 2 subsection 47 of Central Goods and Services Tax Act, 2017 as, exempt supply means supply of any goods or services or both which attracts nil rate of tax, or which may be wholly exempt from tax under Section 11 or under Section 6 of Integrated Goods and Services Tax Act, and includes non-taxable supply. Exempt supply can either be nil-rated supply, or exempt supply as per exemption notification issued under Section 11 of CGST Act or under Section 6 of IGST Act, or it can be a non-taxable supply as defined under Section 2 subsection 78 of CGST Act. Thus, essential ingredients of exempt supply are, there must be a supply. The supply must be of goods or services or both. The supply can be either nil-rated, or wholly exempt under notification or non-taxable supply. There is only one nil-rated supply under GST which is specified in the notification issued under Section 11 of CGST Act, which is support services to agriculture, forestry, fishing, animal husbandry. there is no goods which is specified as nil rated. Examples of exempt supply under Section 11 of CGST Act or under Section 6 of IGST Act are services by public libraries, or services by Reserve Bank of India, or sale of potatoes, tomatoes, onion, garlic and other vegetables and fruits, or sale of hearing aids. In order to summarize, exempt supply can be either nil-rated supply, or it can be a supply which is exempt under Section 11 of CGST Act or under Section 6 of IGST Act, or it can be non-taxable supply. We have seen examples of nil-rate supply and supplies exempt by way of notification. Now, let us understand non-taxable supply. Non-taxable supply is defined under Section 2 subsection 17 of CGST Act, and it reads as follows. Non-taxable supply means a supply of goods or services or both which is not liable to tax under this Act or under the Integrated Goods and Services Tax Act. Thus, there must be supply must be of goods or services or both, and the supply of goods or services or both should not be liable to tax. Fulfillment of all the essential ingredients will be a non-taxable supply under GST. Examples of non-taxable supply are alcoholic liquor for human consumption, petroleum crude, high-speed diesel oil, or motor spirit, commonly known as petrol, or natural gas, or aviation turbine fuel. Now that we have understood taxable supply and exempt supply, let us understand export of goods and export of services. Export of goods is defined under Section 2 subsection 5 of IGST Act, and it reads as follows. Export of goods with its grammatical variations and cognate expressions, means taking goods out of India to a place outside India. We have understood export of goods. Now, let us understand export of services. It is defined under Section 2 subsection 6 of Integrated Goods and Services Tax Act, 2017. The definition reads as follows. Export of services means the supply of any service when the supplier of service is located in India. The recipient of service is located outside India. The place of supply of service is outside India. The payment for such service has been received by the supplier of service in convertible foreign exchange, or in Indian rupees wherever permitted by the Reserve Bank of India, and the supplier of service and recipient of service are not merely establishments of a distinct person, in accordance with the explanation 1 in Section 8. To summarize, aggregate turnover is the total of 1. Taxable supply including interstate supply. 2. Exempt supply which comprises of nil-rated supply, supply exempted by way of notification and non-taxable supply. 3. Export of goods. And 4. Export of services. Here we have one easy case study on computation of aggregate turnover. Hope this case study would be useful. Kindly send the answer of this case study to our email ID, which is office@vrac.in, and we would be happy to evaluate. Hope you have understood computation and calculation of aggregate turnover under GST. Feel free to contact us anytime. For more details, visit our website, www.vrac.in. Thank you.